Bing bong. I am live with another edition of the State of Bitcoin podcast. And I really want to thank from the bottom of my heart everybody that's been streaming me sats on any podcasting 2.0 app such as Fountain. And if you guys want me to read them on this show, feel free to leave me a little boost and a little note there. We do have one note from the last episode from Joey's Achilles. So shout out to Joey, the Canadian Bitcoiners podcast. Said first the Canadian Bitcoiners, Len and Joey, then Foss, now BTC Sessions. Keep the Canadians coming, man. Bullish on Canadian Bitcoiners. So, Plate Licking Pleb already kind of tweeted it out, so it's a little teaser of next week. But I will be having him on. So the Canadians in the audience here, they're going to be diving into everything going on in the Canadian Bitcoiners conference that's going on in Toronto in June. So be sure to tune into that episode next week if you're really interested in the Canadian side of things. And I'd also like to thank my sponsor, Codl.co. That's CODL.co. If you haven't gotten your Bitcoin off exchanges, what the hell are you doing? I mean, come on. You've seen all the signs. Binance is stopping withdrawals. We've got FTX. We've got Celsius. We've got all these other ones. What makes you think your exchange is not going to let you pull your Bitcoin off exchanges at all times? Just get it off right now. Do it into some sort of cold storage and buy a punch plate from Codl.co and use promo code GreenCandle when checkout. You'll get 10% off and you'll keep those seed phrases nice and safe through thick and thin. You don't have to memorize them. You don't have to do anything like that. Buy a punch plate and get yourself as prepared as possible to stay sovereign. Now, I've got a very special guest here. I've got Derek Ride, who is the founder of Moontax. So, Derek, how you doing today?
Hey, we're hanging in. It's tax season and it's busy, but we're excited.
Yeah, exactly. So, before we dive into tax season and everything like that, tell us a little bit about yourself. Tell us a little bit about your background. And you told me a little bit pre-show you got a terrible Bitcoin story. So I don't know if that's a great preface for this, but why don't you dive into that a little bit?
Yeah. So I've loved tech my whole life. I've been building computers since I was probably, I don't know, 7 years old, something like that. And I had a techno whiz friend in high school. I think I was 15, 16 at the time. 2010, I remember pretty well. It was probably, it was actually, you know what? Yeah, it was probably like November, December, something like that. And this friend and we would go to secondhand stores and we would go buy computers. And then we would tear them apart and we would build them and we would sell the scrap parts on eBay. And we just had this like little eBay store. And I just like help out on the side. I wasn't like a coder or anything at that point. And he found the Bitcoin white paper. Like literally that would have put us right at the very beginning. And he builds a rig. We mine Bitcoin on it for 2 days. He was like, yeah, that was cool. Trashes the computer, sells the stuff online. And we talk about it all the time. Like I hit him up in 2016, went like on the first ride to, 3K or whatever Bitcoin was then. And I was like, dude, what the hell were we thinking? Like how but we're just dumb kids. And it's funny. Ever since then, crypto's sort of just chased me. And finally I took the leap in, end of 2020. And that kind of kicks off like how Moontax came about is, so I bought Bitcoin on the first, on the second pump to 20,000. And I remember, there's a lot of adrenaline. I bought in at like probably like right around 4,000, just put a few $1,000s in and just like watched it right up. And I was like, guys, what do we do? And then it came back down to 10. Right. And then kind of like went bullish from there. But, that stuck with me. And I remembered the Bitcoin white paper. And so I remember reading it in, this would have been 2020. It was end of the year, probably October. And I worked for a tech YouTuber. His name is Snazzy Labs. And he him and I like always would have crypto conversations, and he would just talk about how it was, BS and whatever. And so I went back and I read the white paper, and I was like, there's just something kind of special about that, like it's kind of the document that like it launched this whole world that a lot of us like are consumed in. A lot of us have jobs in it. A lot of us, really believe in it for kind of there's like a liberating component to Bitcoin specifically, and I'm very bullish on Bitcoin. But anyway, so the last part of that story is I was like, you know what? Like I want to get into crypto in a significant way. So I left that job to go work for an entrepreneur who, he did some angel investments, he did some other stuff, but like his big claim to fame is he invested a decent amount of money into Bitcoin in 2016. And him and I, we kind of traveled around the nation. We went to like NFT NYC and Bitcoin Miami and ETH Denver, and we went to like this conference in Malta, like, and that opportunity was wild, right? Because we felt like we were talking to like the next Elon Musk's, of the space, where everyone's project was going to the moon. It was going to be the next big thing. It was going to revolutionize how you did, some Web 2 thing, right? And it's funny looking back because I realize how much of it was just like, pandering. But at the end of that, so he paid me in shit coins, like quite literally, every week he'd just take his mining rewards, and that was my paycheck. And so I would then take those rewards staking rewards, and I would take those rewards, and they would be on like some arbitrary blockchain, like Binance Smart Chain, Polygon, something like that. And it was this like rat race to like sell this, shit coin before it like dropped in value so that I could pay mortgage, I could, do what I needed to do. And the end of the year comes, and I'm like, hey, Scott, how do I pay my taxes? Like, how does this work, man? Like, we had like a handshake agreement, and now I've got to go do this like kind of strenuous thing. And he goes, I don't know, like figure it out. I'm in Utah. TaxBit is down the street from us, and he's like, try TaxBit. So I did. I plugged in my information, and it was this garbled mess that made no sense at all. There's no user journey. I've never done this before. I would struggle using TurboTax or whatever platform every year. And so I call up my tax accountant. Like, I had a CPA at the time, and I'm like, hey, like I'm gonna send you this stuff. And he was like, don't send me this stuff. Like I'm not set up for this. This is not my lane. Like, you're gonna have to find somebody else. So he like fires me. And I had met a good friend around the time that I had taken the job by the name of Nate, and he runs a company called B10 Capital. And essentially what they do is they help high net worth individuals mitigate or defer their tax liabilities. And so I started talking to him, and I'm like, hey, there is a blatantly obvious need for professionals in the space that can help people not feel overwhelmed when it's tax season, right? And so him and I, over the course of about the last year and a half, we got together and we started creating what is now Moontax. And Moontax has gone through several phases of the company. Initially, what we were really focused on is we were helping individuals navigate DeFi without creating liabilities, right? So I'm not sure, there's no recommendations for me on this, but a good like a thing that we did during the bull market was we took our really valuable Bitcoin and we wrapped it and earned tons of money from staking rewards on wrapped Bitcoin. But wrapping Bitcoin kind of defeats the purpose of Bitcoin, but also in the process, it creates a taxable event according to the IRS. And, we realized that before we really dove in. And that's when I met one of my other partners. His name is Ephraim Olson. He got his JD from Harvard, got his emphasis in taxation from NYU. He's been in the digital asset space since 2017. Very, very knowledgeable, extremely good tax attorney. And I was like, hey, this, how does this wrapping thing work? Is there a way that we could put together an opinion or like a memo that this is not taxable, right? And so then we started Olson and Partners Law, which actually that's what we were operating when I first met you, Brandon. And Olson and Partners Law was kind of it was a law firm that we ultimately centered around Bitcoin. Everything we built was legal positions for Bitcoin miners, right? And so we ultimately stopped doing the DeFi stuff, and we would go to Mining Disrupt and we go to some of these other mining conferences, and we would talk to people about the idea, talk to miners specifically about the idea that receiving Bitcoin through mining, that those assets are not taxable upon receipt, that they are taxable upon the disposal of that asset, but not on receipt. And we had, and we still do, we have a full-blown legal opinion that states that Bitcoin is not taxable upon receipt. And we went and we brought that around to several of the largest mining companies. Riot, we talked to Riot, we talked to Core Scientific, and while we were talking to Core Scientific, this is kind of interesting because they're obviously in the position they're in right now. Their CFO said, interesting. I might even agree with you. But if Core Scientific takes this position, then we don't have revenue. And so our stock price isn't worth anything. So it was weird. It was like a wild realization that we're not going to be able to sell this to the companies, even though we could do refilings on their whole portfolios with this opinion, change their accounting methods, potentially save them, tens of millions of dollars a year, and kind of preserve Bitcoin, right? Because ultimately these companies are earning Bitcoin, and then they've got to churn it into fiat in order to pay their taxes. And we believe in the hold your Bitcoin off chain kind of strategies, right? If you want to play with play money, right? But if you believe in the vision of Bitcoin, dollar cost average and hold it in private. But yeah, so now we've ultimately used Olson and Partners Law to continue to do those great things that we've been providing for people. But we've also added, kind of staking rewards positions, really trying to help out the DeFi community too, because there's some interesting technology there. And, I think that anybody that's trying to create in this space deserves a chance. I want to see cryptocurrency. I want to see digital assets thrive. There are things that I wouldn't really care if they worked out or not, but ultimately we ended up, working with several of the sort of compliance tax softwares in the space. We've worked with Zen Ledger. We just announced a partnership on Tuesday with CoinTracker. And ultimately what we do now is we help individuals reconcile their accounting for their crypto transacting, right? So a lot of us in the space, we're holding Bitcoin, but also a lot of us are holding Ethereum, and we're bridging it to Avalanche, and we're, staking it, and we're taking out DeFi loans, and we're triple collateralizing and doing some things that you can't do in the traditional finance space. And that's what makes crypto unique. But that's also why crypto's hard, is because you may or may not realize the tax implications that are happening because of these trading routines that you've developed, right? And so we come in from a consulting perspective, we come in from a legal perspective, we have a handle on reconciling these accounting mistakes as well as filing on these taxes. And so it's, it can be full service, it can also be a la carte, but my goal is to help people learn how to use digital assets and not ruin their life because they don't realize what's going on from a tax side, right?
Yeah, and so I mean, right off the bat, I just want to ask that, make sure I clear up this question from, because I believe I've heard it somewhere, and I believe Gary Gensler said it, but I want to make sure that I'm on the right track here. But
Right.
I believe that Bitcoin is dealt with as a commodity when it comes to taxes, and altcoins all of them are deemed as security so far. Is that correct?
So there's nothing's defined. So that's another thing. Like when hold on, let me answer that question. So no, that's not necessarily how it is defined currently. So the IRS has come out with a guideline. And a guideline is a really fancy word for just somebody's opinion, right? There are a lot of things that the IRS has said that is pretty much not arguable from like a tax perspective. It's like, yeah, of course it's defined like that. But there's a lot of things that they've said where they kind of show their ignorance, right? There's aspects of digital currencies that I don't know if you can argue that position or not, right? And so our take is look at the facts, look at the defining technology, and then talk to an attorney about that to like further explore what your options are, because that was a big thing when I was getting into this. I was like, okay, cool, I'm going to pay my taxes. Let's go see how. And so I type in, cryptocurrency tax guidelines, right? And the IRS 2014-21 pops up. Excuse me. And it is a 6-page document, a 16 question and answer format, and it very loosely defines any of it. It's kind of hard to look at that and go, oh yeah, this is really straightforward, really easy to look. They're really broad, super generalized answers going. They're using terminology like virtual currencies, right? And it's like, what does that even mean? And so our other stance, and the other thing that we really believe in, is that good legislation has to happen. And I think a lot of people will dislike that I am pro legislation, but the reason for it is because once these obscurities are defined, then that will usher in adoption, that will usher in institutional wealth to enter the space. Your tax softwares will get better, the scams will be fewer and far in between, and people can operate in Bitcoin like they always have. People can operate in these other DeFi platforms like they do. And it will, I think the I think the ups and downs will be more mitigated, but also I think that it takes thought leaders, it takes industry professionals that it takes the Bitcoin miners, it takes the tax attorneys and the tax filers coming together and going, hey, we don't agree with this, right? We think it should be this, because taxes should never be the reason that an industry fails. You know, taxes are an inevitability. It's just something that happens, but they're also people's generally, you know, businesses and individuals' largest expenses in a year. And if you don't approach taxes with strategy, planning, you know, sort of a goal in mind, you can blindlessly trade your way into like a huge bill.
Yeah, I mean, and that you're nailing it on the head there. So I got a couple questions for you, just some scenarios I'll run through with you. So
Yeah,
the
please.
first one is, all right, say you have, I don't know, XYZ coin, Dogecoin, whatever, and you swap it directly for Bitcoin, whether it's on one of these services that has been theoretically shut down now, or something along those lines. Because I think like majority of services that offer that, maybe Coinbase does, I'm not 100% sure, but a lot of these services offered a swap feature where essentially, I don't know, you have one Ethereum, you want to swap it for some Bitcoin, you can do that. Is that considered a taxable event, even though you didn't, I guess, transact into US dollars, or maybe Coinbase or whoever did it behind the scenes?
Sure thing. Yeah, sure thing. So yeah, let's take Coinbase. So if on Coinbase you hold an asset and you're trading for another asset, trades are always defined as taxable events. The tax is defined on what you paid for the first asset and what the up or down motion was before you traded it to the second asset. So if you bought Bitcoin, well, let's not take Bitcoin. Let's take Ethereum. Let's say you bought Ethereum at $100. So you put $100 into ETH and you then trade it for Bitcoin, but it went, your ETH was worth $100 more when you sold it. You're going to be liable for the increase in the $100. So you're paying, like let's say you didn't hold it for a year. So there's all these defining factors, right? If you hold it for longer than a year or more, it's a long-term capital gain. If you hold it for under a year, it's a short-term capital gain. So the reason that's important is because long-term cap gains, they're around 22-ish%, and that goes up or down depending upon your tax bracket. And then long-term cap gains are defined at like close to 38%. So it's defined as like income tax. And this is based on metrics if you're in the higher tax bracket, just so you guys are all aware. It could be considerably less, if you have smaller positions in cryptocurrency, this may or may not apply to you. But the point in telling you that is you're not paying taxes on what you originally paid for the ether, but you will for any increase. And on the contrary, if ETH went way down, you would earn a minus, like a capital loss on that, long-term or short-term depending. But and there's the simple strategies sort of surrounding it. It's called loss harvesting. Wash sale rules don't apply to digital assets yet. So like if you bought a huge position in Doge, right, and you were like, yeah, it's mooning, and then you realize that there wasn't a lot of value behind it and it kind of came way down at the end of the year, before midnight on the 31st, you could sell Doge and immediately rebuy it and coup that loss and have that apply towards your taxes for that year. You can carry those losses forward, and you can use them for subsequent years when you expect big gains to happen in your portfolio.
All right, cool. Yeah, that's pretty interesting. And I want to say that I thought that, but I mean, they're offering these platforms or these like, mechanisms to make it easy to trade. And I think like that kind of gets lost in the weeds with a lot of people, especially when they're doing their taxes. And so I'm sure a lot of people are maybe receiving some tax forms from a Coinbase or wherever, and they're like, what the hell is all this? But I've got another question for you, and it might be one that stumps you. So if you don't know the answer, feel free to just say that. But there's been a lot of these, you mentioned like staking, and there's been a lot of these platforms that have gone under, right? So you think Celsius, BlockFi, all these other ones. So, from my general understanding, when you put, I don't know, if it was like Bitcoin on BlockFi, for example, and you received 3%, you would be taxed on whatever that 3% that you quote unquote earned in Bitcoin was worth at the time of whenever it hit. So if that's paid out monthly, daily, weekly, whatever, you're kind of taking a tax hit for that. So the first question is am I correct on that? And two, do you have to pay taxes on all those quote unquote earned values of whatever you stake, Bitcoin, whatever, if now you cannot withdraw anything? So like a lot of these now are like kind of shut off, right? You can't withdraw any of the money. So it's theoretically stuck in there, but it's like paper gain, I guess. You like have it there. I don't know. I mean, obviously when the bankruptcy stuff is very complex. So if you can dumb it down just a little bit and bring it back to like a personal level, go for
it. Okay. So yes. So the first question was on stake rewards. If you're earning stake rewards, but they're locked in a vault that basically will never be unlocked, right? That's kind of your point with like Celsius and some of these other institutions. So stake rewards, this is a really controversial topic, and we're a little bit more we want to help people. I think that's a really easy way to word this is like, yeah, absolutely. I believe in paying taxes, but in the same breath, I also want to help you pay the right amount of taxes, right? Not a penny more, And so we have a position that we tell people it's a possibility to take. And essentially that is currently under the guidance, when you stake an asset and you're earning that asset back, right? So a staking reward, essentially, that's a taxable event. And that event is an income event. So it's just like you go to your day job, right? And you get your paycheck. They take your taxes out of that. You're on your way, whatever. So staking rewards are an income event currently, according to the guidelines. Now, we have a position where we think it's probable, and again, this is not legal advice. I can't give you guys legal advice, but we think it's probable to define it two ways. First of all, you could define it as a reward, therefore income, but you also could define it as a return of that same asset as it's just a bundled ball. Now, there's still tax associated with that if you've sold it, right? But our point is that it could be defined that you can hold that asset and that you don't get burned on it, essentially, right? And so it's not taxed until sold, right? That goes back to the Bitcoin thing that I was saying. The second question is, so really quickly, like to talk specifically to these institutions that are shutting down. That's a mess, right? It's kind of, it varies person by person. Some people are like, no, it's gone forever. I want to write that off. I just want that to be gone, and that could be considered a risky position, right? Other people are going, I've held it this long, I'll just see what happens, right? And so they don't do anything about it. But I think it would be pretty hard for the IRS to define that locked asset as something that you would need to pay in, basically tax on the staked rewards. Like I think they would have a really hard time telling you to do that, considering the company's not really operational. But then moving into the second part of your question, which was, sorry, remind me one more time. I lost my train.
So it's basically like, the same kind of question as you were almost answering there. But, I want to bring up a point kind of from the first answer before we get into
Sure.
this.
Yeah. Please, please, please.
So basically, the way I view it now, and you can tell me if I'm wrong, but the way I view it is it's a lot of these institutions are kind of looked at almost as like a crypto bank.
Yeah.
So say it's like a high yield savings account or something along those lines, and you put in XYZ coin in there, and then it's, you're getting the whatever reward is percent back in that same coin. So, if you were to do that in a normal bank, or you were to, buy a stock that gives a 5% dividend or something along those lines, that's something that would get taxed. But the thing I'm unsure about is that if it's compared to maybe a tax or a dividend as a stock, if you were to use that dividend to then rebuy the stock, which many services allow you to do, is that taxable then too? So is that kind of like in the same line?
So I can't directly answer that just because I feel like that would be like diving into like mass like advice,
Yeah,
right?
yeah. I'm sorry about that, but
No. I just wanted to clarify. I think that you're bringing up some really interesting points, and I would urge people to think about that because that's what's happening right now with legislation in Congress. Like there's a huge mad dash to how the heck do we regulate this space? You have the fall of FTX, which everyone thought was like the holy child, right? And it it was the biggest catastrophe of maybe this last year. I don't know. Maybe there's others that people feel were larger, but it was so unexpected for the community in a lot of ways that and obviously like I'm like, hey man, self custody. I wasn't affected. I will say this, with a smile on my face. I was not affected by any of them. None of them. Not Luna, not none of them. Right. And so but it still was a huge shock, and it was like a really tragic and sad day, I think. And um Congress is like they're trying to figure this out, and the people that are determining these things don't have they don't have any skin in the game in a significant way. And so I would urge people to, you know, talk with your legislators, like make this a big deal, because if this becomes the defining moment of our world that I think a lot of people assume it and want it to become, then there has to be a lot more involvement from the ground up, right? Like we kind of act as like this baseline. And so um that's a great question. I don't know, right? Like there's a lot of ways that you could talk about staking rewards in a positive and negative light. And if it is defined that way, I think for a lot of people, staking doesn't single asset staking, single token staking doesn't make a lot of sense. I won't say names, but there was a token locally that launched like a huge success. Tons of people went in, big lots of value locked up in there. And people were earning like $5,000 $10,000 a day because it rode from a penny all the way up to 36 cents. Well, at the top, that's when they were earning these huge lump sums of cash, and they were just taking them and they were rethrowing them back in the system. Well, then it crashed back down to 1 cent. And so if you never sold anything, nothing, not one app, not one piece of that token, you could, if you had staked $10,000 at the beginning, and you were unstaking and restaking it, basically harvesting and restaking, auto compounding, so to speak. At the peak, you on paper would have earned $1 million, and at the bottom would have owed $500,000 in taxes, but only have had roughly $245,000 in holdings. Well, do the math like that. You're screwed. That's a polite way to say it. Like you're screwed. And so we've had to be like on our toes because people were doing some things that don't really have finance basis. Like, what were you thinking? Like, it's too good to be true. Probably is, right? And so anyways, like it's just tricky. Like, I think you need to figure out your risk tolerance and then talk to a legal professional and a tax professional too, but
Yeah, I mean,
it's crazy situations.
yeah, I mean, there's crazy situations out there and crazy situations with staking and like some of these exchanges, right? Obviously, one of my sponsors is a Punch Plate. So, I mean, I fully believe in taking your Bitcoin off exchanges. I don't believe in staking it. I don't believe in, a lot of these exchanges, when you see a token that they're offering, that's their token and they're incentivizing you to buy it, which really doesn't have any backing, huge red flag. I mean, I could go on and on about why I think, you should get your Bitcoin off exchanges, but that's what I want to get into right now with you.
Yeah.
Because if you bought it on an exchange and you put it into cold storage now, and it's like, whether you did it through some mixing service, you did it on Sparrow, some of these ones that are non KYC, you bring your, Bitcoin, you bought it on Strike, Coinbase, some of these other ones, whatever you bought it on, and then you took it off, and now the IRS theoretically doesn't know where that is because it's, in a KYC thing, I mean, non KYC thing. There's obviously digital forensic people that could probably figure it out if you're not using a mixing service or whatever, or you're not doing the proper things to kind of, hide your identity behind all that. Regardless of all that, if you were to pull it off of an exchange and now the IRS theoretically doesn't know where that Bitcoin is that a taxable event then because you brought it off and maybe you didn't sell it?
Nope, not at all. Yeah, please do that, everyone. that's a great strategy. And I'll I'm very, very transparent. There's a lot of things that I love about the space in general. A lot. I mean, geez, like I talk to some of these back end engineers, and I just am like you guys, like this is great. Like the sort of the silent revolution was worth it. Like this is so cool. It's so exciting to be a part of this. But at the same time, please understand. And I think if okay, so if you are trading actively, pay your taxes. It's worth it. Please, I assure you, it's worth it. Within 5 years, they will have the systems. They'll be able to look at all of the stuff, and there's statute of limitations. So if like you didn't catch a few things and whatever, fine. Like you're beyond statute of limitations. But for illegal activity, they can go back as far as they need to. So like do good, honest, legal things. But when it comes to strategy for holding Bitcoin or holding any digital asset that you might think has intrinsic value, yes, like try not to trade it. So there's a few ways that taxable events happen, but almost always it's a sell or a trade, right? So swap, trade, whatever, those are all taxable, right? And you're going to get taxed at either that capital, long-term capital or short-term capital gain or loss. And then the other thing is, if you have like wallets, right? So you have like you onboard through a centralized exchange, or you do use like what is it? Is it Bitcoin.com or right? You're buying these assets, and then you have cold storage device of choice, right? If you're self-transferring, that's like going to your Wells Fargo or your Chase Bank and walking up, handing them your ATM card and saying, "Hey, I want $500." It's not a taxable event. They're going to get you to $500. You're going to take it, throw it under your mattress or whatever you do, and turn it into Bitcoin, right? But the idea is that self-transfers are fine, and it's okay to protect yourself from be anonymous. Another thing, like sort of in that vein, is again, don't do illegal activity, but understand that if you're going to be doing high transaction, high volume trading, you should pay your taxes on it. They'll figure it out. The IRS is smart. They're not dumb. But in the same breath, understand that if you go onto one of these platforms and you enter in your information, you're associating yourself with your first and last name, your phone number, generally your email address, and then you're connecting every wallet you've ever used to these platforms. So I suggest, if you're going to do this, have your Bitcoin completely unaffiliated. Have your highly precious assets, digital assets, like unaffiliated, and then create other accounts and don't use those accounts in tandem. And you can do that. That's perfectly legal. There's nothing illegal about that. And then just, connect all of your high trade volume accounts up, file your taxes on that. But buying and holding Bitcoin is not taxable.
All right. Well, we do have a question in the crowd, in the chat here from Romel. So shout out to Romel, who's a regular in here. But I'll read it out to you. And it was a question that I kind of wanted to ask as well. So overall, great questions. I appreciate Romel contributing in the chat. So for those listening, catch it on YouTube, and you can potentially ask a question in the crowd as well during the next episodes. But how do you follow taxable events? Like if I send Bitcoin from me to you over the Lightning Network, or if somebody is streaming sats, for example, to podcast, that's kind of getting popular now with podcasting 2.0. Or if, I'm buying something or some good or service with Bitcoin, that's kind of becoming popular now too. Is that all a taxable event?
Yes. And that's because, and that's why I am excited about regulation, is because there's an opportunity to fight for Bitcoin being, a tender, being able to do certain types of things with it without incurring this like big taxable event. So that's the thing. Like these are assets right now, and to the government, they're assets. So if you buy a house and you buy it for, $100,000, good luck. But if, let's say you bought it for 100 grand and it rode up in value to 150, you're going to owe taxes on the 50,000, right? So that's the biggest problem. But if you do that kind of transacting, there are things called accounting methods, right? So you have like FIFO and HIFO and LIFO, right? If you're using last in, first out LIFO, and you're dollar cost averaging your fiat into Bitcoin, that's a great accounting method, because your long-term Bitcoin that you bought, hopefully you were much luckier than I was, bought it back in 2012, you sent your money to Mt. Gox, got your Bitcoin, right? You held on to it. Leave that Bitcoin alone. But these taxable events they're based on what they call lots. And so it's like, if you bought a grouping of Bitcoin in 2016, you bought a grouping of Bitcoin in 2020, you bought a grouping of Bitcoin yesterday, you would want to sell the Bitcoin that you bought at the most expensive price. You'd want to sell the Bitcoin that you bought at $62,000, right? Because what that's going to do is you're going to incur capital losses on that Bitcoin, right? So that'll actually help you when your whole portco is worth more, right? But yeah, so that's how they know, right? If you send it to your buddy, you send it to, you buy an iPod from somebody, like what's going to happen is they're going to see that Bitcoin leave your wallet. It's going to register as a send, and then that's going to be a taxable event. So full disclosure, we have a partnership with CoinTracker, but CoinTracker is a great place to, go. You can put your accounts in there. They'll show you at a high level what your transactions are. Now, where it gets complicated, and this may or may not apply to this audience, where it gets complicated is when you get into DeFi. It's when you're doing cross-chain analysis. You're sending Ethereum to this blockchain, over to this blockchain, over to this blockchain. Bitcoin, you can do the same thing with, like Ren BTC, right? They've got a really robust platform. But the idea is that that's when it gets complicated. If you're buying and you're holding Bitcoin, if you're just selling it casually back and forth with your friends, sends, purchases, sells, those are going to be taxable events, and they're going to be hard to avoid.
Yeah, that's interesting though, because it seems like, the I guess buying using Bitcoin to kind of buy and sell items is starting to popularize, at least in the US.
Yeah.
We've got things like Oshi. So shout out to Oshi and Michael Atwood. They're building great products in Austin. And a lot of these places are starting to accept Bitcoin as payment, whether that's through the Lightning Network using Strike's API or something else. The adoption seems to be coming somewhat quickly. Now, how quickly that's going to happen, I don't really know. And, obviously the regulation and kind of the rules and taxable event, definitions behind all that is going to be a little bit lagging behind this technology. So,
Of course, yeah.
When it comes to like working on, our purchasing something, right? I mean, I feel like that, like, say you're in line, right? You're going to go buy a sandwich somewhere or buy a coffee or whatever. And you're in line, you see, hey, buy this for X amount of sats or however much dollars. Well, if you're in line right there and you say you go to, I don't know, your Cash App, Strike, whatever, buy Bitcoin while you're in line right there, and then send it to this person immediately after, is that still considered a taxable event, even though, I guess the price didn't change?
No, that's a great point. Yeah, it is, but that's the right way to do it. The right way to do it is to not wait 6 months, right? Because if you bought $100 of Bitcoin at the beginning of the year and the goal was, okay, I'm going to buy a $2 candy bar every single day for the full year, or however long that would last. Let's say that $100 turns into $200, right? Which is completely possible. Every time you'd spend, that would become a more expensive candy bar, because now you're spending $2, but you're incurring a really high sales tax. So probably an okay strategy would be like, okay, I'm going to dollar cost average in. I'm going to spend $100 on Bitcoin this week. I'm going to use $50 in Bitcoin at my favorite local convenience store, right? They take Bitcoin, they've got Bitcoin ATMs, they're supporting the ecosystem. And then that on my $2, I'm going to incur 28 cents in tax liability. And so I'm only going to pay out 8 cents on those taxes, right? So yeah, there's definitely strategies to do this. I would say that there are, but that's sort of that's the plus and minus of Bitcoin, is that you're offloading shitcoin or US dollars into this thing that we believe to kind of bolster the economy and our position in it. But at the same time, as Bitcoin succeeds, there's tax liabilities associated with it. So I don't know. I'm not the right person in my company to be talking about this in great detail, but there's a few members of our community who have personally met with Gillibrand and Lummis, who proposed. I'm forgetting the name of the bill at the moment, but they proposed a bill last year that was, both. It was a good step in the right direction. I'm not going to say I loved everything in the bill, but in speaking with Wyoming representative, she's smart. She's really smart. And I think that if there was enough backing, right? If there was enough people that kind of spoke up, there are some things that I think would happen that could help that position, right? But I think it's going to be hard to just we're not going to be like El Salvador, right? We're not going to just be like, yep, legal tender. it's the United States. And sorry, I'm not sure where everyone's from. You may be from different parts of the world. Hopefully you are in El Salvador, where it is, a non-taxable event as you spend. But the idea is that this is a community effort to get the right things to happen for Bitcoin, to kind of like bring about like probably what a lot of us have daydreamed about, for a long time, going, geez, like what if this does take over, and it's everything that Satoshi outlined, right? But yeah, it's a big group effort, but that would probably be the way. That would be the way, is to buy it in small increments, with the intent to spend it.
Yeah, exactly. And I mean, I'm putting you on the spot here with some tough questions, right? But I mean, I think it's a great and timely conversation, because
Yeah.
we got James here in the chat who's saying he's going through his tax documents, and I'm kind of in the process doing the same. So I think a lot of people are kind of around that, thinking about these kind of things, whether they've spent Bitcoin or done something else. And so before I let you go, I got one more question for you, because you did bring up El Salvador. So I have to ask, say a pleb or somebody else, or somebody along those lines, travels to El Salvador or travels to one of these places where Bitcoin is legal tender and uses Bitcoin to spend, but they bought it in the US or one of these on ramps, that, or maybe they earned it, or did something along the lines of that, but they are a US citizen, or a citizen of another country. Obviously, you're expert in the US tax code, not anywhere else. But does that kind of trigger a taxable event as well if you're spending Bitcoin but in a country where it's legal tender?
Yeah, that's a great question. There may be a way to, you'd want to consult with a tax attorney on that. But my high level, if you're a US citizen, you're paying US taxes. So if you move to El Salvador, completely different, conversation. Puerto Rico, like, right. We have clients who live in Puerto Rico who pay 4% tax, and they laugh at me, right? It's just like the big middle finger. And I'm like, yeah. Very funny. Right. But because you're a US citizen, my immediate answer would be that you're paying US taxes. So yeah, it still would be. But maybe there's a case, like if you're spending a significant amount of time in El Salvador, and I'm not sure what options you would have, but yeah, unfortunately, I do think it would be taxable.
Yeah, that's unfortunate. Well, I hope that doesn't discourage any plebs from going down to El Salvador and kind of, spreading that circular economy, spending their Bitcoin down there, because, it takes a big risk to be that first country to make it legal tender. And so I think the US definitely has a long ways to go. And we're going to see a lot of regulation, I think, throughout this upcoming year, because of a lot of things that we talked about, right? A lot of the, the FTX, a lot of these exchanges shutting down, and kind of almost like taking people's money, a lot of fraudulent things like that. So I think, whether it's unfortunate or fortunate, I just hope that, whoever's making these regulations becomes super educated or meets with the right people to kind of.
And there are coalitions out there. Like go see if your state has like a legit, I'm a part of the Utah Blockchain Coalition, and we basically consult with the representatives here. And there's a team of us, and we come from different, areas of I hate this term, but Web3, right? And so there's a lot of us there. And we talk about these issues. We go, hey, this is a big strain on this thriving in our state if XYZ, right? And so get involved. Like, that's great. And then also, like, for those of you that are doing your taxes, if you're struggling through it, feel free to go to the moontax.com and reach out to us. We do free 15-minute consults, and then there's options from there. But if you ever have any questions or concerns about your taxes, we're always happy to be a resource.
Yeah, for sure. So yeah, check out Derek and the team over at Moontax. But you've been very generous with your time, and you've gone in and answered a lot of tough questions for everybody. So I think everybody has kind of an idea, and maybe if obviously everybody's individual situation is a little bit different. Maybe I didn't ask all the questions that you're curious about. So be sure to reach out to Derek. So Derek, why don't you tell people where they can find you and what you got going on?
Yeah, so on Twitter we have Moontax. I think it's like M00NTAX, right? And then also my personal, which is just my first and last name, so Derek DEREK, Ride WRIDE. Feel free to send me a message. I'm not as active on Twitter just because we're in the heat of tax season, and so there's a lot going on there. But and then this, you can go to the site, so moontax.com. And there's like some form fills on there and stuff. And I'd love to get you scheduled with, either me or one of our team members, and we can look through your situation and give you some high level advice at the very least. So
Yeah, for sure. So be sure to check them out. All my homies hate taxes, but unfortunately we have to pay them. So,
that's how this started, man. It was like an inevitability that we had to kind of come together on.
yeah,
So.
I mean, you can escape the Big Daddy IRS for only so long before then you get audited, and then you're going to end up owing a lot more. So, reach out to, your tax consultants or Moontax or somebody else, to potentially find a way to get around all this, to pay minimal.
Talk to your CPAs, talk to people local like that. I think that's a great starting point. We're not the only solution out there.
Yeah, for sure. But you guys are a great solution. So, Derek, thank you so much for coming on. And I'll have to have you back on maybe when there's some new legislation or something else, and we can kind of discuss it. I'll try to stump you that too.
We can hash it out for sure. I'd love to get Alex on here too. He's big into the legislative portion of this and has a lot of opinions.
Perfect. Well, we'll have to do that again. So, Derek, thanks so much, man. Have a good one.
Yeah, I appreciate it, Brandon.